Greetings! This is Adyo. Adyo is a business that sells baked goods and pastries. As the accountant of Adyo, today I'll be going through the accounting process in conducting an analysis. After preparing the trial balance, I made some balance day adjustments, starting with the value of the stock take. It revealed a stock loss of 3,100, which I recorded into the general journal. This will allow me to calculate the gross profit for the financial period. I then proceeded to write off $200 of bad debts from Mr. Wong by first crediting the DCA and then debiting the allowance for doubtful debts. After creating an aging schedule, the business decided to allocate a special allowance for Mike and Will, as well as a general allowance of 10%. This is recorded into the general journal as seen here. I noticed an error of omission where the contract entry was omitted in the accounts, so I recorded it into the general journal where I debit CCA and credit DCA. I then proceeded to make adjustments for accruals and prepayments, which were all recorded in the general journal. The next adjustment was for the disposal of a fixture. I started by removing the cost of the fixture and then the accumulated depreciation, which I've calculated as shown. Then I recorded the proceeds from the disposal of the fixture and closed off the disposal account. The last adjustment I made was for the depreciation of non-current assets. These were the calculations under the straight line method and the reducing balance method. Now the adjustments were done and my income statement was ready. I calculated a net loss. From there, I prepared a balance sheet and a statement of changes in equity. These financial reports were created with 4 important concepts. Firstly, the accrual concept defines profit as the difference between the revenue earned and the expenses incurred. This is seen when we make adjustments for prepayments and accruals. Since the advertising expenses were only $6,000, this was rightfully recorded in the income statement. The prepaid amount is recorded in the balance sheet as a current asset. Next is the going concern convention, which states that the business will continue indefinitely. This is seen in the computation of depreciation, as it assumes that the business will continue to use the non-current assets until they are fully depreciated. Prepayments as well as accruals are done in the expectation that the business will continue operations in the future. Products are also recorded as assets as they are believed to be able to generate future economic benefits for the business. Next, the accounting period concept states that the life of a business can be broken up into different time periods. This is seen in the income statement, balance sheet, and statement of changes in equity where the date is specified. Adjustments for prepayments and accrual also serve to match the revenue earned and expenses incurred for that time period. The last concept is the prudence concept, which requires accountants to be careful and to understate profits rather than to overstate them. This is seen when we make allowance for doubtful debts, which is used to absorb bad debts when they happen. This way, we understate the profit and avoid overexpanding. Inventories are also recorded at cost price as per the historical cost concept to prevent overstating the asset value. After understanding the financial reports, we will now present them to the owner, Alex. Alex needs to know the general well-being of his business and whether or not to take expansionary action. To decide on that, the income statement is used to keep track of the profitability of the business, which helps to determine whether the business is maximizing profits or not. The balance sheet is also used to evaluate the overall health of the business and their liquidity. The gross profit ratio is calculated to show how efficiently the business generates profit from its sales. Using the formula shown, Adyo's gross profit ratio is calculated as 28.46%. This indicates that Adyo is generating 28 cents of gross profit for every dollar of revenue it is earning. This also means that Adyo has 28 cents left to cover the operating costs. When compared to the industry average, Adyo's gross profit ratio is actually higher. This is a good sign as the business is able to generate a decent amount of gross profit. The business could also make a reasonable net profit if the expenses are under control. Which brings us to the limitation of the gross profit ratio. Although the business has made a decent gross profit, they seem to have overspent, leading to a considerably high net loss. This heavily affects the interest coverage ratio, which is a financial ratio calculated to show how easily Adyo can pay interest on its outstanding debt. Using the formula, Adyo's interest coverage ratio shows a negative value due to the net loss. This means that the company is not generating enough profit from its operations to meet its interest obligations. If the business is unable to service its debt, it would be at risk of bankruptcy. This also shows that the business has declining performance and lower profitability. To make matters worse, Adyo's gearing ratio calculated with the formula shown is 87.14%. This ratio is used to compare the business's debt capital to its owner's equity. To put into perspective, a gearing ratio of more than 50% is typically considered to be highly levered. Not only is Adio's gearing ratio more than 50%, it is also higher than the industry average. This means that the business is financed by a high amount of debt compared to equity, and has higher risk of loan default or bankruptcy during periods of low profits and higher interest rates. In 2020, the COVID-19 pandemic has caused an economic recession. Businesses are suffering from low retail sales, causing them to have lower profits. This is reflected on Adio's net loss. Together with the high amount of debts and their inability to service them, the owners should focus on reducing the financial risk rather than expanding the business. The most practical way to do this is to increase the profits. Firstly, the business can start by keeping track of the overhead expenses such as labor costs by using a job costing sheet. This helps to manage the labor costs and reduce expenses on salary. To reduce rental costs, the owner can ask for better lease terms or go mobile to save on office space. This is because baked goods can easily be sold online. Next, credit policies should be improved to reduce expenses on doubtful debts. Adio should revise credit terms, provide discounts, and generate reminders. Stock management can also be improved to reduce stock loss by holding less inventories. These are other suggestions to reduce costs, and that's it. Thank you!